All right, so welcome to find your next six-figure infill deal. We do this every Tuesday or every Friday at 2 o'clock Mountain Standard Time. So a little bit about me. My name is Zach Matson. I'm a developer and builder here in Boise. I got started back in 2013 buying a couple of duplexes. I lived in one side and rented out the other. And then in 2016, I got full-time into flipping houses and then transitioned in 2019, 2020 to infill development. That's where I kind of saw a lot more potential to grow my business. And last year we started scaling up and added a little over 60 units to our build pipeline. And at the start of this year, I kind of wasn't buying any of my own deals anymore, and I saw a lot of opportunities sitting on the market with these one-off splits that people weren't taking advantage of. So that's when I kind of decided that and realized that we could take our background as a team and use it not only to grow our company, but also to help individual investors earn returns. Most people don't even know are possible. Most people aren't aware of this strategy. A few people are, and they do these deals, but it's usually like, one or two at a time. So we saw an opportunity to really educate people on it and help more people take advantage of these deals. And because of my unique career path, my team and I have hands-on experience in every stage of these deals. I've personally analyzed thousands of these deals, and we've completed dozens of them ourselves. We've held rentals, done flips, gone through entitlements, and managed both the horizontal and vertical construction. So since we're the general contractor, we control the build process start to finish, which is why we can execute on these deal lists opportunities in a way that most investors can't. So that's a little bit about me. I'm going to jump into our guarantee as well and a little bit of our process. So we have a step-by-step process from, analyzing these deals from the very get-go all the way through due diligence, through the entitlement process, through the build. So it's kind of multifaceted and multi-steps, but we have a process from start to finish that we work through. So because of that, we've kind of come up with we call it the 6 figures in 36 months or less infill deal offer, and we have a guarantee. So why this works for investors is because most investors love the idea of real estate, but they worry about losing money, of course, not knowing the process. They're worried about projects dragging on too long, or contractors cutting corners, or not having control or visibility. So we've designed this to really eliminate all those concerns. So the number one part of our offer is we have expert deal underwriting. So we vet, analyze, and underwrite every infill deal on our list. We don't just estimate numbers. We've done every step ourselves in our own projects. Now, what I will say is on the actual deal list that I'm going to show you here pretty soon is that this is a really high level analysis. It's kind of designed to be quick and dirty. Once somebody is interested in a deal and wants to get under contract, that's when we dive into the further due diligence, where we really get into the nitty gritty and the numbers and do more research. The second part is, so we offer a negotiation support. So we'll guide you and your realtor on how to structure and present offers. Since we've also been the buyer ourselves many times, we know how to get these deals accepted and in terms that work for everybody. And then we help with the step-by-step due diligence. We'll do most of the due diligence, and we'll even give you the checklist as we go, so you can check off and make sure you're comfortable with the deal before you ever close. We also are licensed contractors, so we can renovate any existing house if that's needed. So that'll be part of it as well. Entitlement management, so we can also get through the entitlements. That's also part of the deal. And then the horizontal development and the vertical construction. So what we also offer with this is anybody that has access to our list full time, and even if you just want it, we'll give you the ultimate guide, our introduction to infill development. It's basically just kind of like our ebook or e-guide on infill development. We'll also provide you with our due diligence checklist so you can follow along with the due diligence process. and then we will give you our underwriting worksheet at the towards the end of due diligence. We'll give you a one-page underwriting worksheet, and that's what we base our guarantee on. So this basically acts as a final go or no-go underwriting worksheet for you to base your final investment decision on. And at the end of the project, we'll compare the results to this guaranteed underwriting worksheet. We'll provide you with our entitlement process checklist and projected timelines. We'll give you our construction process and inspection checklist. And then we'll provide you with a third-party new home inspection report. So we do that on all our new construction projects, as we actually bring in third-party inspection company to inspect at 4 different phases. We do that at framing and rough-ins, drywall, interior and exterior finishes, and then a final inspection. We also are going to start doing a monthly progress call where we'll review all of our current projects for all of our clients and the progress that's made from month to month. And this will be open to everybody. And we'll cover our own projects as well as client projects. So if anybody's, either has a deal that they're invested in or owns one of the deals, or even just somebody that's curious what we have going on, anybody can join that call. So then the last part is going to be our entitlements guarantee, so that we're going to guarantee that if we don't achieve the unit count that we underwrite, most of these are just single lot splits, but some of them are subdivisions where we can do multiple deals. But if we can't do the unit count that we underwrite, we'll waive our next fee and apply it towards the development costs. Or sorry, our next fee, or apply it to our development costs. And then the last part is the underwriting guarantee, so that we're going to guarantee that if the project doesn't meet at least 100% of the cash flow or profit projected at final underwriting, we'll refund you until it does, up to $50,000 per deal. So part of that is we're going to be super conservative on our underwriting. So our goal here is to underpromise and overdeliver on everything. And it's kind of crazy that we're even, guaranteeing that, because, 2 years from now, nobody really knows what the real estate market is going to do. So we're kind of also putting, risking our profits to make sure that you're profitable as well. Okay, I'm going to jump into sharing my screen here with the deal list. Okay. So after like the previous 3 weeks, all like 3 weeks in a row, we didn't have any new deals that came on the market or anything that was really good. But last week we actually had one that came back on the market. It went pending right away, and then it came back on the market. But this week we actually had a few come on the market. So one in particular is the deal of the week. That's this 2251 South Sumac Street. I'm going to pull up the listing here so you guys can see it. So this house is pretty much move-in ready. It appears. It doesn't look like it needs any renovation. It might be a little bit dated, but it still looks nice and rentable. The neat thing with this property is that there is an owner carry option available, and what they say that they want from that is $150,000 down and then 8% interest only, and that's a balloon payment after 3 years. So 3 years is great because it gives the time needed to do the lot split, and then you don't have to worry about getting a bank loan and then having the bank sign off on the partial reconveyance that needs to happen when we do these lot splits. So the seller will still have to do that when on their note, but if they know that up front, there's not going to be an issue. And then I would think too that is probably negotiable. So that down payment amount or the interest or both, a lot of times, they're willing to budge on that. I don't know. They just did a price reduction on this, but yeah, it's been on the market for almost 3 months. So, you could probably get in there with your agent and negotiate this a little bit. Okay. So first, let me pull up the overhead here. Okay, so this is the overhead. This is the house. This is Sumac Street here. This is on a cul-de-sac back here, which is great, which is part of the reason why this deal works is because right now they take parking off of Sumac Street, but it looks like we could actually take parking back here. In fact, they already use this spot right here. I looked at the street view, and it looks like they actually use this for parking right here. So this property, this is 32 feet, it looks like, roughly from the house to the property line, which when you do the 5-foot setback, that allows for a 27-foot wide lot. I don't know how familiar any of you guys are with a lot of the older lots on the bench and Southeast Boise and the north end, but a lot of those areas were pre-platted with 25-foot wide lots, and that's why you see now a lot of builders are going in and tearing down, these smaller houses that are sitting on 2, 3, 4 of those lots and building those skinnier row homes. So this is basically a row home lot, just plus 2 feet. So you can actually build a 17-foot wide row home on this property, which is basically we've done a half dozen of these properties, and we can lay out a really good floor plan that's super functional, and people kind of tend to like them. So um, getting back to the numbers here. So the way we do this, okay, so we're just going to assume that the existing house is probably worth about this much. I kind of checked comps and it looked like it was right in line. It might even be, it's probably because it's a little dated. It's probably why it's been sitting on the market, but it's not bad on price. Entitlement costs we're estimating to be 40,000. That includes our fees. There is some development costs with this. So the city, on every one of these developments, if it doesn't have uh, curb and gutter and sidewalk, they're going to make you put it in. So we factor that into the cost. We also factor in on this one specifically. I think that the street needs to be widened, so we also factor that into the cost. And then we factor into the cost to bring in a new sewer line from the street, and typically have to upgrade a transformer. Um, and then a lot of times, you usually put gas and water as well, but those costs are typically covered by the utility companies to do that. So this is what we anticipate the cost to be, including all that. And then if you wanted to just get it done and split and sell it as a profit on the lot, you could do that, and you could probably sell the lot for 160,000. This is pretty conservative. I think, there's other lots, especially in Southeast Boise, you probably get a little bit more, but this is just factoring in, if you had to sell the lot and if a builder's going to buy it, like if I were to go in and buy it, I would buy it for probably 160,000 because that still gives me margin to build and make a profit. Some people, I feel like when they do these lot splits, they get a little bit greedy on the lot value, and then it sits there for months and months and months because they're trying to sell it to a final end buyer that's going to custom build something, and those don't move very quickly if they do that. So that's the profit if the lot is sold at that point. Now, ideally, we're actually working with clients that want to build it all the way through to the end and basically hire us to build it. That's basically why we're doing this. We make a little bit of a fee on the entitlements, but most of our profit is made on the construction activities. So this is what we anticipate the build cost to be, like what our cost would be, what our fee is. This is the total for the land portion, which is basically zero, plus the entitlement, development, and construction costs. This is if you get a loan on the construction. Now, a lot of times too, I should mention when we do this underwriting. So we typically underwrite this with the most amount of cash out of pocket for this spreadsheet. But if people are trying to minimize their cash out of pocket, a lot of times on construction loans, for example, you can roll this interest into the loan. So you wouldn't actually pay this out of pocket. This would be in the loan. As long as there's enough loan to value in that loan, the construction lenders will typically do that. And a lot of times you can also include like some of the or get reimbursed for some of the entitlement and development costs as well, as long as your numbers still match up. This is what we anticipate that 4-bedroom, 1,800 square foot house to resale for in this neighborhood, 715. And then when you go to sell it, so the profit on the new construction is a little over 200,000. Now, where the overall profit comes down is because of this. So when you buy the house, you're going to have holding costs. So this is what the holding costs are with the interest. And then, so I calculated with with the seller's terms, what they're asking, it's a $38.66 per month payment. So that's over 2 years. Once you have it split, then you can basically sell this house and recoup some of your initial down payment back. But then you're going to have, sales costs, and that's where you lose some of that money unless this value goes up. And then this is the rental income during the phase of construction. So what's kind of neat about all of these, all these splits is you have an asset on the property already that you can rent out to somebody that's basically going to pay ideally the entirety of the mortgage. Sometimes it doesn't always work out that way, and you have a little bit of extra cash out of pocket that you have to come up with. So in this case, it's like an extra 30,000, and that's where I'd say, try to negotiate with the seller to get that either the purchase price or the down payment or the ideally the interest rate down, so that you're not paying too much more than what your additional rental income is. And that's how you can kind of mitigate this a little bit. You can basically, if you can even these out a little bit more, you can actually get, you'd still lose money on the sales costs, but you gain another 30,000 in profit here, which would be great. Then, so once you sell that original house, and you don't have to sell the original house, we just analyze it that way because a lot of these houses you wouldn't necessarily buy as a rental otherwise if you weren't doing the split. So the primary objective is to split it. You can obviously keep it as a rental if you want to, but most of these we're going to assume that you're going to sell that original house and recoup some of the cash. So that's the cash you'd get back, and then the capital remaining in the deal, and then what the total equity remaining in the deal is. Oh, so by the way, so on this deal, this is if you sell both properties. So if you sell the new construction house when it's finished, and then this is if you keep the new construction house. So with this strategy, this could allow you to basically build a new construction house, keep that as your rental, and then now you have a new construction house that's a rental that you really don't have to worry too much about capital expenses for like the first 10 years. So your ownership is lower cost with CapEx than traditional rentals. And then you also can maximize the rents typically on new construction. And we can design this to your end goal. So basically, if your end goal is as a long-term rental, we can try to minimize the construction costs. If your goal is to rent it as a short-term rental, then we'll actually design it as a short-term rental to maximize this rent. But this is your cash flow, not factoring in any expenses outside of your construction payment with tax and insurance. So that's something to keep in mind. We can when we go through the underwriting, we'll actually factor in all the other, rental expenses, but this is just your baseline cash flow. Like if you self-managed, and just rented it out yourself. Okay, so that's the deal of the week. Before I move on to anything else, does anybody have any questions? No? Okay. I'm going to pop into our deal of the week last week, and this was actually our deal of the week back in June also, and it basically sold the first weekend, or went pending, I should say, the first weekend, and then it was pending for like a month and a half, and then it just came back on the market last week. So that's this 1202 West Hale Street. So what's interesting about this, so, nothing special, but this is 4 bedrooms, 2 bathrooms, has a basement and then the main level, and then it has a bed, like a master primary ensuite and bedroom up here. But if we look at the floor plan, there's actually this in the basement, there's this unfinished storage here, which could be converted to a bedroom. We could probably even get creative and do something here, like with this laundry room. I haven't actually walked through this house at all, so I'd have to look at that. But then the other thing too is there's a family room and a living room, so we could actually wall this off here and convert this into another bedroom. So the way we underwrote this and analyzed this is as a 6-bedroom rent by the room model. So this is near the college, just a couple blocks away. And so there's a lot of not a lot, but there are a handful of rent by the room houses. Actually, probably a lot of them over by the campus. I've seen a couple of them hit the market. So this is a common play or model for this neighborhood because it is by the college. Now, if you're doing this in West Boise, I'd say, that might not work as well. But since it's right next to BSU, this is a great model. You can rent out the room by, probably an average of $800 a month. Zoom out here a little bit and get to where so this is the new Albertsons, and then BSU is all this stuff over here. So just a couple blocks away from BSU. So it's a great model for that rent by the room. Getting back into this here. Oops, wrong house. So yeah, so basically you can turn this into a 6-bedroom. We'd probably also want to look how maybe add another bathroom down here. So then these 3 bedrooms are sharing a bathroom here. That's probably actually what I would do is add a bathroom down here. And then that way it's a 6-bedroom, 3-bath. So then you have 2 bedrooms sharing 1 bath up here, and then 3 bedrooms downstairs sharing 1 bathroom, and then upstairs has their own bathroom, and then you can get better rents on this one as well. And then the other thing that you can do with this one is you can actually build another garage with an ADU above. So you can build another 2-bedroom ADU above the garage right here. And now you have 8 bedrooms on this existing house. This will cash flow from day one. So then while we're going through the entitlement process to split off this lot, so we can split off this lot back here. And then we can build another house that's designed as build to rent, and we can build another 6-bedroom house with another 2-bedroom ADU in the basement. Because this is a small lot, there's some additional stipulations with the lot, like maximum house size, for example. So we factor that all into our underwriting on this. But so if you're looking for buy and hold rentals that can have some crazy cash flow. So this is if you built everything and then sold the properties. You still have like an excellent return. Like this is an excellent ROI. Like most deals don't have that kind of ROI. 90% is kind of insane. But it's because of the neighborhood and the rent by the room. But really, I think the ultimate play here is to keep both properties so you're not getting any money back. So you're putting in the 202,000. This is how much equity you have in there besides that. So you have an extra 340,000 in equity. And then this is what you could expect to cash flow from all that. So when I sent out my deal of the week last week and I posted in social media, like I also factored in like what all the costs were. And so this cash flow after all costs conservatively is still like 1,150 a month, I think, something like that. I'd have to go back and look at the numbers, but that was, super conservatively kind of paying a high monthly property management fee because of the rent by the room nature, but then also having, paying the utilities and all that kind of stuff. And then short-term rental, this is actually just analyzed with renting the ADUs as Airbnbs. and then still keeping the main houses as the rent by the room model. So you could actually probably squeeze a little bit more cash flow by doing the Airbnb model. So yeah, so this one is great for somebody that wants to buy and hold and have rentals. You basically can turn into 2 properties and 16 bedrooms. And then 2912 Harmony Street. So this is still on the market. This has been on the market for a while now. They haven't budged on the price recently. It's they originally did a price adjustment of like after a couple months on the market, but I think it's got to be 3 or 4 months on the market now. Yeah, 102 days, so we're at about 3.5 months. So this one, you could theoretically probably rent this out turnkey. It's not in horrible shape. Um, if you want to maximize the resale on it, there's probably some extra margin that you can make by fixing this up. So, and that's when I did the underwriting. I have like just a little bit of a budget to fix this up. Especially like exterior paint, can probably like landscape a little bit better. So that's what this underwriting is. Let's see. Okay, so this is basically renovation budget just to kind of spruce it up a little bit and make it a little bit better on the resale. Um, so then this should actually sell for like 575. So that's what the neighborhood comps show if it's nice. And then this is what your sales cost would be. Same thing, like holding costs on the existing house. Normally what I do on most of these underwriting on the holding costs is I factor in, well, both for the cash out of pocket and also the holding costs, is I usually factor in having to put 25% down on like a DSCR loan. And so this is factoring in that loan. So 75% LTV DSCR loan at, I think this is at 7%. And then also the tax and insurance incorporated into that. And then this is your rental income. So this is also giving it 4 months to renovate first before renting out. So then you can rent it. We're going through the entitlement and development process. And even, maybe you rent it out first if you're not, and then maybe at the end you renovate it and flip it at the end. If you're worried about it getting trashed while you have renters in there. But then you could actually make a little bit of profit on this house. This isn't always the case. Some of these you actually lose money on this existing house. If you can renovate it, that's, kind of an extra bonus. And then your profit on the new construction here. So this one, the total return is pretty great. 178,000. It does take a little bit more capital. What I will say though is there's ways to get this capital requirement down. It's just that we underwrite this, like I said, with basically 25% down on the original purchase and then basically paying for the entitlements, development, and the interest on the construction loan. But a lot of that you can actually roll into the construction loan. So theoretically, you could probably get this even closer to 200,000 or even less if you do some kind of more traditional financing where you can do less percent down if you live in it. Okay, and then we have this one. I think we just trying to remember if we added this one this week. I think we did. Oh, this was last week. I added this one. So this one's nice too. It's actually turnkey. This could actually probably be a great Airbnb. It's actually really nice. It doesn't have a ton of profit potential. It's not bad. It's not bad. What I would say is maybe the best play on this. Yeah, you could actually make more money if you just bought it, especially if you want to buy and hold and keep like an Airbnb. You can actually split this lot off of the back, and then you can actually make more money just by splitting and selling the lot. So this is enough room here. We can split off, I think it was a 25-foot wide lot or 20. Look at my sheet again here. 35-foot wide lot. So this is, so this was the original front of the house. So uh, basically it has a Victory Road address. So this is the front of the house. So right now they have a patio back here, but you could split off. So do this as a 5-foot setback and then a 35-foot wide lot over here, and then build a 25-foot wide house right here. And then, like I said, you can either, just sell this lot off or keep both of them. The reason why it's not as profitable is because the house, again, is like pretty much fixed up already. So you lose money by, you kind of cancel out the build on that by selling the existing house because you don't have any benefit to fixing it up. Then there's another one here on Pendleton. There's another one that was new this week, I think. Oh, this is pending. So this actually, yeah, so this came on the market earlier this week and went pending right away. So we're going to mark this as pending. But somebody actually, I actually know the guy that flipped this, but somebody flipped this property, but then, didn't want to go through the entitlements to separate the lot. And I will say, if you're going in and flipping a house, you're trying to be in and out as fast as possible, whereas, the lot splits take a little bit of time. Typically on the process, it's a 3-phase process. The first process is entitlements, and that usually takes about a year. That can be a little bit less depending on what all is involved. And then you have the development phase. Sometimes that can be rolled in kind of at the same time as the vertical phase. But on most of these, since they're subdivisions, we have to put in the infrastructure. So that process can take 6 to 12 months total to do the infrastructure plus get the plat signed. And then another 6 months to build after that, and then exit. So typically we say 3 years, but depending on the deal, it could be less. If it's a bigger like subdivision deal, like multiple units, it could take a little bit more, especially if you do it in phases. So those are the 3 best single family deals on the market right now. I'd say this one too is actually decent, especially particularly if you want to keep rentals as Airbnbs or whatever. This one actually has the potential to, I mean, you'd probably about break even on the long-term rents, but you could cash flow a little bit. Okay, so these are multifamily deals. So let's see. Right now, there's not really anything on here that I would write home about. Okay, so the 6750 West Hill Road. So this one actually is right next door to an R1C. It's zoned A1. So right now you can only, you just have the existing house. This is going to auction on September 20th, I believe it is. So the reason why I put it on here is because it could potentially be rezoned. Let me pull up the map here. The problem with this property, with the rezoning and development of it, is that there's no sewer in Hill Road right here. It's not in the sewer district at all. So there'd have to be a lot of due diligence on where the sewer is coming from and how much it'd cost to get there. So I know there's sewer here and here, but I think like the closest access to any kind of sewer whatsoever is probably at this intersection, or this intersection. So that makes it where it's like, man, I don't know if it would work unless, there's probably sewer in here somewhere too. So maybe you can, run something across here. I don't know. We just have to look into the due diligence on that pretty heavily. This property here is zoned R1C, so that's why I'm saying like the city would most likely rezone this. The primary issue is just the access to the utilities there. But the other reason why I put this on here too is if somebody wants a flip, so this probably was going to take this is a pretty healthy rehab budget. You could probably get this, down to 200-ish. But the ARV is probably 750. I've even seen them as high as 950. So, you have a pretty good margin on this as a flip, assuming it sells for around that 300 at auction. Then we have 920 Clitheroe Drive. They did just reduce this price this week, or maybe I guess on the 22nd. So yeah, last Friday they reduced the price on this, so they brought it down by about 30,000. This property is I don't think it's going to pull this up. I need to do a different address. I can pull up the map. Okay, that's the property next door. This is 920 Clitheroe. So this is these two parcels. So what's interesting about this size altogether, you can actually do 5 connected townhomes. That's probably the highest and best use, and then selling those. So it's decently profitable. Ideally, you could get a mortgage with this house. The problem is you can't really develop this. You can't develop townhomes separately, so you have to develop them all at the same time. But you could basically buy this house with a regular mortgage, and then tear it down once you're ready to start construction. So that is a possibility. I just put in on the spreadsheet to just buy the property cash, because then you don't have to worry about paying off the mortgage or whatever to get the construction loan. You could theoretically maybe do something too where you do like 2 units here and then keep this and then 2 units here. You just have to probably tear down the structure that's impeding the property line. But there's some possibilities with this. And what's kind of unique about this, so this is right next to the Idaho Transportation Department. I'm hoping they still sell this. I don't know if anybody's been following that, but they tried to sell it and then the Idaho legislature canceled it, but then they got a full estimate on the remodel of this building because it's condemned right now, and it ended up being double the 25 million that they originally estimated. So now it's going to cost the state 50 million to keep it. So I'm hoping they end up selling this and then they redevelop all this because it's a way better use of the land. But then you have Whitewater Park is over here. So kind of a great like up and coming area, especially if this gets developed. I actually built an ADU right across, right up the street, right here somewhere. Oh, right here. So just kitty corner up the way a little bit, and then I own this property right here. So, yeah, lots of potential here. And then if you have anybody, or if anybody on here is looking for bigger projects, so a lot of these are multi-units. So I'm not going to get too far into the weeds on these because they're, they're typically a little bit more higher investment chunks. So if somebody is interested in, more units, like if you look at these additional lots, so these are, medium size or greater medium sized subdivisions. They just take a little bit more capital, a little bit more to them. So if somebody's interested in these, reach out to me and we can discuss these, but I'm not going to discuss them on the call here today. We did have a couple of vacant lots hit the market this week. So 3 of them specifically. And they're pretty interesting. So this 1626 South Shoshone Street, I was actually walking through this neighborhood a few weeks ago and saw this house. Looked like it was ready to get torn down, and then they tore it down and put it on the market. So um so anyway, they're probably a little bit high on the lot price here, but it's not too far off. And I imagine, you can get a cash offer in there and negotiate the price. But there is some potential to profit here. So, this doesn't look like it's not a home run deal, but the nice thing is this is a great return. And essentially this is a 1-year deal because you can go in, ideally while you're under contract, you get the plans made for the house. And then by the time you close on the property, ideally you have a permit in hand, and then you have the finished house, 6 months later, and then you sell it and you're in and out in a year or less. And so then this, cash on investment and this capital too, you could actually probably finance half the purchase price. Um, so you might actually have this more like 80,000, and then your ROI is even better. So, but 30% in a year is, that's outstanding. And there's people that'll do these deals all day long. And then we have this one on Irving Street. So this is this is kind of on the West Bench area. It probably needs to be the same price as this. It's probably a $150,000 lot at best. But I did analyze this too with rents. So if you built it with an ADU, so this is building it with an ADU in the backyard, you could actually theoretically make some pretty decent cash flow. And then better yet, if you rent them out as Airbnbs. And then that's the same thing with this 9577 Irving Street. By the way, just to show you something, for anybody that hasn't done lot splits before or not familiar or doesn't think this is something that people do, I don't think the map is going to pull up on this one either. Anyway, there's an existing house here. Let me see if I can find a different address. So basically what I'm trying to do for other people on this call, this person already did, and they're selling the lots. Here we go. This should be probably across the street. Yeah. So right here, this was the original house on this property. So notice how that has this huge backyard here. Well, all this person did was bought this house, went through the entitlements to split these 2 lots off. And then they had to do that. They also had to put in the road to access the back here, and probably the sewer and everything. So these are all build ready. But so they had to put a little bit of money into the infrastructure and development, but now they're selling these lots, and you can see from my spreadsheet that they're probably a little bit high priced here. But they're trying to get 375. That they might end up getting 300 out of them, but they're going to make 6 figures pretty easily just by selling the lots on here. So this is something that people do. It's not unknown by anybody. It's just not known by a lot of people. And it is, there's multiple steps involved. So you just have to, be patient with it. And, luckily we have experience in all of this. And we work with, professionals that do, all the engineering and all that kind of stuff too. So it's not just, we're not just drawing stick figures on a sheet, although some of my SketchUp drawings look like that as, rough sketches. But this is like, what the potential could be on these, if you kept them as rentals. Again, on the resale on these, this is not with the ADU. It's probably about the same with the ADU. This probably needs to be lower in order for this to make sense to build it and sell it. But this Shoshone Street could be a good deal for somebody. Let's see. The rest of these are subdivisions again, like mid-sized subdivisions. So if you look at the total lots here, it's kind of the same thing. So if anybody's looking for multiple units, I'd be happy to talk with you separately, but we won't discuss it on this specific call. And I think that's it. So we keep track of the deals that our clients close, and then also the closed properties or the sold properties that get sold. These sold properties, I'm doubtful that these are getting developed. So I'm actually going to our team will probably actually reach out to a lot of these people and see if they are developing them at all and kind of approach them with that as well. Okay, I think that's it for today. I think that's all the deals I wanted to cover. I'm going to stop sharing my screen for the time being. And then does anybody have any questions? Hey, Dan, I can't hear you. I don't know if looks like you're unmuted, but I can't hear you. You can also type your question into the chat box also, and I can answer it that way. I had this issue on a call with the city of Meridian on a due diligence meeting, and like I was out of town, and my mic they couldn't hear me in my microphone. I was like, I had no idea what was going on, but it was maddening. All right, anybody? Okay, I'm not going to work up the numbers on the Sussex property. Dan is familiar with that. Okay. Um, yes, I will. I made my screen bigger and I couldn't. Okay. Yes. I'm trying to remember which one this one is. So this one I think is fixed up already. Yeah, I will actually have this probably right after this call. I'll finish working on this. Well, I think I stopped on this one doing the full underwriting here. I can actually finish really quick after this call. But I stopped because I think the most profitable, this is kind of the same thing where the house is, you actually could make more money just selling the lot, I think. One thing I run into in West Boise, so 83704, this happens a lot where like the money it takes to build something and then the infrastructure you have to put in, you're just not seeing the margin on the new construction. For whatever reason, like, a lot of the new construction houses over there aren't selling as well as other areas of town, and they're selling for a lower dollar per square foot. So they're not horrible deals. It's just on this one, like if you weren't dealing with this existing house on the property, this would be a good profit, to buy it and build it and profit in, a year or whatever. The problem is this is after 3 years, and then you actually end up losing money on the house because you have to sell the house because it's already fixed up. So it's not great on a resale perspective, unless you just buy it and split off the lot. Then you do have some profit in that lot. And then what I will say too is, if you did that, and let's say we get the lot entitled, split off the lot, we'd have to put the infrastructure in. It doesn't, there's not a ton needed on that one. But when that's done in, let's say it's a year and a half from now, and the market is significantly different, and now the houses in West Boise are selling for 10% more, or 7% more, and they're moving better, then we can reanalyze it at that point and say, okay, it actually is worthwhile to sell it. And the other thing too is this is a nice house. Like maybe maybe you do want to keep this as an Airbnb or whatever anyway. So I will finish updating this. So yeah, I will kind of finalize that, but I would say on this one, the best strategy, at least today, would be to plan to do it with entitling the lot and then selling the lot, and then just reanalyze that once it's entitled. Or just realized I didn't really share my screen when I did that, but um yeah, Dan, I have your email address too. I can email you the rest of the underwriting on that when I finish that line.
Hey, Zach, this is Dave. Can you hear me?
Hey, Dave. Yep, I can.
Hey. Yeah, hey, I had to join late for the meeting this afternoon. I apologize for joining late, but I was just curious, are you going to make the recording available afterwards? Do you typically do that for these sessions?
Yep. Yeah, so I will yep, I will put it on YouTube, and then I'll email you the link.
Oh, perfect. Yeah, thanks. I really would like to review it and dig in a little more. I appreciate that. Thanks.
Yep, absolutely. Yeah, and the other, kind of what I mentioned at the beginning too, um, everything on the spreadsheet here is very high level. We really get into the nitty gritty of each deal. We try to be conservative on all this stuff, but like there's so many details that depend on the buyer that buys these, like what their strategy is. So we go in a lot further depth on this once you tell us that you're interested in something and work towards buying it. Then we'll actually jump into the more in-depth due diligence and really get a plan together with what the property can be for your goals. And that's all explained at the beginning of this video too. So
Perfect. Thanks.
the other two things too for people that are on this call today, that is the first time. So we do this call every week. I also have so if you want regular access to the list, so we have we can give you access to the list. We just have a training set, like 3 training sessions that we have you go through to basically cover all the details like of our process and what we're doing, so you can kind of understand it a little bit better. And then once you go through those, then you can get access to the list. We also have you sign kind of like a non-compete disclosure that you'll basically use us to do all this if we're doing all the work for it. So we're not too worried about that anyway, because we know that we're providing a ton of value, and that guarantee nobody, like, there's literally not another builder or developer out there that will ever think about guaranteeing something like that. So we do it because we're confident in it, and we want our people to win that are doing these deals. So all right, any other questions? Speak now or forever hold your peace. I'm going to stop the recording here, but feel free to speak up. Come on.